Welcome back, traders. It's Hima here, and I've got chart of the week. Don't call me Loonie. A peek at FX pairs. Today's Wednesday, November 18th, 2020. Important reminder before we look at the charts that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So here it is, my chart from my latest skinny market outlook that I do every quarter, specifically covering the Loonie, which is the US Canadian dollar pair. Now, you can see that I have a couple of vertical lines marking important points. So the two purple lines back from July 31st and currently November 13th show key timing points that I put out in these markets. And the key timing point for November I put out this quarter, obviously before it happened, otherwise it wouldn't be useful. Now I want to show you something, okay? I'm going to move the lines around and then bring them back. See how this July 31st line pointed to a short-term high in the market, not necessarily a major reversal? That's still really useful information, guys. So remember that when you're using your key timing points, based on the tools you learn in the loss forecasting trading system, right? The key timing points may alert you to a short-term high or low, which can be just as useful to trade as a long-term high or low. Okay? Now, just like what happened back on July 31st, the same thing happened recently on November 13th. Okay, I'm going to move this over for a second so you can see. We had a recovery off of one of my favorite types of candle patterns. I teach that in the 4 zones RSI coverage system. A retracement higher, which looks like it came to one of my favorite retracement levels. My GAN students, you know that. And formed this high on the 13th, right on the date that I had laid out for key timing weeks prior. Now, we're starting to move lower. And so I'm going to give you a little mid-quarter update here and give you the next key timing point for the Loonie. So the next key timing point for the Loonie is November 24th. And again, that's based on the most recent price action that has unfolded. It's not a cycle I could have seen when I updated the reports early in the quarter, but it's something that I'm seeing now and that you can trade off of. All right. Let's take a look at some other FX pairs that are having some interesting price action right now. All right, here we have the euro. Now, I want to point out that at the time that I put out this quarterly outlook earlier in the quarter, I had noted support at 1.1612 and resistance at 1.1917. And check it out, guys. They were both tested almost to the tick. I mean, just barely a nudge below the support. And now a run up into the resistance and a little pop above it, and both have held. Okay, so when I put these longer term outlooks out, another pointer here is that on top of the key timing, which I'll talk about in a second, the support and resistance levels, right? Resistance in blue, just like in the skinny reports, and support in pink, those can be extremely useful to guide your analysis. Now, there is key timing still in play for the euro. It is in early December. That's the hint I'll give you. For the exact date, go check out your Skinny Markets Outlook. If you are not sure how to get your copy of that, you can write into my team and they'll help you out. So that's a look at what's going on in FX land. These are just 2 of the 6 major pairs I cover in long-term analysis every quarter. And you should check out the full Skinny Markets Outlook report for the remaining support, resistance, and key timing points. Catch you on the inside. You can sign up at himaready.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.